Hello and welcome to the Weekend Investing Daily Bite of 26th of June, and another day when portfolios really did not perform as per the market. But we'll talk about this shortly. The main issue that we are going to discuss today is that the rate cut narrative, is it a trap? Why one should not get fooled by this continuous talk of rate cuts and how they are changing so rapidly, but that towards the second half of the video. So where are the markets headed? The markets are going up in full steam. Nifty up 0.6% again, third day in a row, three soldiers kind of a candlestick pattern. And overall, you can't really complain about the market. Market has hit a new all-time high, 23,841. All-time highs are indications that there is no upward resistance. The market will fall on its own weight. It corrects on its own weight whenever it will. But a all-time high means that there is nobody who is sitting in loss in that instrument or that index, uh, uh, having bought earlier and not being able to sell so far. So the resistances are caused by people stuck at different prices. And right now, Nifty is at all-time high, and so are so many other stocks and indices as well. Nifty Junior, another slow day, minus 0.18%. Absolutely no movement here. So what is happening in the Nifty is not getting replicated in the rest of the market. The declining advanced declining ratio is skewed towards the declines. Mid caps again not performing at all, going very in a flattish mode, minus 0.26%. Small caps absolutely flat, 0.21, just a doji candle. So there seems to be suddenly they like as if life has been sucked out of all these rest of the market except the front end stocks, and that too very, very limited concentration within Nifty. I'll show you that. Bank Nifty also performing just like Nifty at 0.5%. So Bank Nifty has gone 46,000 to 53,000 very, very quickly, doing quite well. FIIs for a change bought yesterday at 1100 crores. DIIs sold 149 crores. So last four sessions, DIIs have bought only once. Of course, FIIs were irregular in their buying and selling, but domestic institutions are now showing some sign of uh, exhaustion, at least in the last 4 days. And let's see where this goes. Also, this uh, uh, season of no news virtually, where the budget is still some time away, the earnings reports for the quarter are still some time away, and hence there is this lull that no update is able to fill right now. Heat maps, just very, very bright greens in Reliance, Bharti, Ultra Semco, and ICICI Bank. ICICI Bank, in fact, has been back to back many sessions of good gains. HDFC Bank also, but today HDFC Bank was resting. Reliance just hit a six out of the boundary, plus 4%. So uh, I don't know how this works, but the index is getting maintained, right? So the index is not being allowed to be stagnant. The index is pushing forth, and whenever you will find that the market is moving up without the breadth of the market, that is a very unsure market. So, I mean, in the next few days, if there is some sell-off, I won't be surprised actually. But nevertheless, Nifty at an all-time high, you can't be complaining about that. Bharti Airtel also up very nicely after the Spectrum auction, where they won a lot of new new Spectrum ranges, 3% there. Mostly others, Mahindra down 2%, Bajaj Auto down 2%. You had JSW Steel down, uh, and some very flat stocks. Whether it was IT or FMCG, didn't really move much. Nifty Next 50 was even worse, I would say. Only Godrej CP managing some gains along with Varun Beverages. Other than that, you had some deepish cuts on Vedanta, Zomato, Hindustan Aeronautics. Others, minor cuts, 0.5% to 1%. Most of the public sector enterprise stocks, power stocks, some pharma stocks, no real gains today. So it's just very suddenly, it seems as if there is no interest left in the markets. These last two sessions has just become, very you can say energy less kind of markets, while energy sector as a leader for the day clocked 1.4%, uh, infra up 1.3%, and then you had a list of sectors that were just 0.5% or 0.3%, and real estate and metals actually losing ground at minus 1.4 and minus 1.5%. So very, very mixed kind of situation, nothing very exciting. Uh, but these are some of the sort of days that you just have to fill, like this week should end ASAP because nothing is happening in this week except for some very specific moves. Energy index after 4 or 5 sessions has started to go up today. If you see the energy index, despite 1.4% gain, is trailing the election high top. So it has trailed the rest of the market. It is almost like, that when they say कि जो अभी तक नहीं चला वो चलेगा. So whatever the market was doing was fine, but whatever the stocks or sectors that did not perform so far are now performing. So it is almost a, a like a somebody's pushing those stocks to, because there's nothing else remaining to be pushed right now. Stock spotlight, of course, on Reliance in a one single session move has recovered what it had lost since the election day high. And if there is continuity to this, then Reliance itself can easily, support the market to go up beyond 24,000 also. So this is a fantastic formation for the Reliance stock, and this can easily go a couple of hundred more points on this, and that would mean, Nifty going between 24 and 25,000 soon. Um, on the long-term charts, the Reliance has been stabilizing since February, so a breakout here could mean going slightly higher at least, and testing those resistance levels. Gold is started to weaken below this moving average. Gold absolutely flat. There's no change. Very funnily, despite news of current account being positive now for India in the last month, uh, USD INR is slipping, and that is stabilizing gold at the current rate in INR, even though gold US dollar has slipped in the last few sessions. So coming to the main discussion, is the rate cut narrative a trap? So what I'm trying to say here is that if you recall from the beginning of 2024, we have been hearing that in January, I remember there was a news or forecast that Fed may do 7 cuts in 2024. Then by February, the forecast became 5 cuts. By March, we have got this headline that Fed is seeing 3 cuts in 2024. Then it became 2 cuts, and 1 cut by early. This was just 2 weeks back, and just today, the news is there that one of the Fed governors is saying that it may not be time to cut now. So can you see how in just 6 months the narrative has changed from, we will have 7 cuts to virtually no cuts this year. So a lot of these predictions that are made or forecasts that are made are never met. And it is not just about interest rates. I'm saying about stock prices, about indices, about inflation. A lot of predictions and forecasts are just, nonsense, because they are never realized in actuality, and they influence the market prices so much when they come out. I mean, if somebody is coming out and saying, there's going to be 7 cuts this year, obviously the market is going to react to that. And if the influencing voice is that of the Fed or some Fed watcher, so again, this is, tantamount to trying to lead the market where you want to lead it, even though it may not actually go there. So maybe it is the election year why this was, earlier being pushed like that, uh, and even now, because the election is there in the US, the Fed wants to, keep that, uh, blanket at least one cut kind of a situation or narrative, but it's not coming around because inflation is not going down. Now, if I see, let's say these 3 years of how rate hikes and S&P 500 have performed, uh, I'm showing S&P 500 because the entire interest rate cycle is determined by the US for the rest of the world practically. So if US is hiking, very few other countries will be able to not hike or go the other way. So if we see this chart, you can see that S&P 500 is rising here, and there was a rate hike in March 17. There was another one in June. There was another one in December. Another one in again March 18. Another one in June 18. Another one in September 18. So all this while the the market was rising, right? And only when the impact of lagged impact of so many hikes, and the market expectation that there will be no further hike when another hike happened in September, then maybe the market cracked, and then there was another hike even when the market was cracking that hard. Now from here, when you've had so many hikes and market has cracked, the market expectations are that now there will be cuts and the cycle is turning. So market already runs up 20% from here even before the first cut happens, and really nothing much happens after the first cut. Then second cut happens, nothing much happens. Third cut happens, and then there is some continuation of the rise. So there is not one-to-one relationship between rate will get cut and markets will rise, and rates will be hiked and market will fall. So this narrative that is built in our mind, the market is running much ahead of this. So last two year and a half, we have been hearing that rate cuts are coming, rate cuts are coming, rate cuts are coming, and markets are already discounting that to I don't know what extent. Now, even when rate cuts will happen, maybe a sell on news, or there will be no real positive reaction to that at that point of time. Another way to see this is this chart, which shows you the last uh, almost 17, 18 years of federal funds rates and how the market was expecting them to take place. So let's say 2008 fall when it came, this was the expectation that rates will rise to 2% within a year or two. 2 year later, this was the expectation that interest rates will rise like this. 2 years later, this was the expectation that that they will rise like this. It actually happened after 7 years. And when rates were going up like this, there was expectation that they will moderate like this. The hairline is the expectation. Once the rates were at the top, there was expectation that they will rise further and stabilize, but they dramatically fell down like this in COVID times. Once COVID was over, this was the expectation, next 4 years this will go like this, or it will go like this, but it went like this. And last 2 years have been expectations that it will stabilize at 2, 2.5, it will fall to 3, it will fall to 3.5, it will fall to 4. And as time is going by, the expectations are shifting forward and forward and forward. So in that sense, a lot of these predictions, a lot of these forecasts are completely meaningless. The market is supreme. The market is taking into cognizance all these expectations together. Just follow the market. Don't try to time the market based on, okay, I will do this if interest rate rises, I will do that if interest rate is cut. You will really harm your portfolio if you wait for those events to happen to take your decisions. Let's say India example. Now India example is repo rate is here at 6.5%. Inflation has been falling, and inflation is falling from 6% to nearly 3%. Rate is not getting cut, right? So if your decision is based on, I will take a decision when the rate is cut, but the market is already, uh, structured itself towards what is the expectation. So market has been rising. Now it may so happen that when the rate gets cut, market may not rise from there for a significant period of time. So you will be mistiming your entry or exit from the market because you are waiting for the news to happen whereas the market has already front run the event that is going to happen. So that is why the BBC principle, Bhava Bhagwan Che, always look at what the market is doing. Don't hear all these narratives, what is going to happen, whether interest rates are going to go up, interest rates are going to go down, inflation is going to flatten. All that narrative is good for just, discussion sake. But when it comes to actual action that needs to be taken in the market, none of this actually works. The price action of the market, the price action of the stocks is the ultimate truth in the market, and that should be followed to the T. Thank you so much for watching. Please comment below how you process all these macro numbers when you are investing in your own journey, how you are able to forecast or predict, if you are able to, and if you are not able to, how do you, deal with that? And love to hear and see your comments on this subject. And thank you for watching. Please do like and share our channel. We would love if more and more friends and family were to watch this channel and make use of some of the data that we present here. Thanks. Bye.